Good morning. It's Thursday, the 31st of July. That's the last day of the month, people. And here we have the one, the only, the enigma that is Piers Buckworth.
Morning, mate.
Now, what lengths did I have to go to get you in for 7:30 this morning, my friend?
Oh, dear. Well, we had a fun evening, didn't we?
We had a fun evening. We went out for what was meant to be steak last night, but Piers called me and said, Rich, I'm in the Hollywood Arms. I can't be bothered moving. Do you mind coming to me instead, and we'll just have dinner here? So we had a lovely dinner at Brinkley's next to the owner, your friend John.
Correct.
And yeah, wonderful evening.
Very lovely evening. And veal Milanese was on top form.
I must say, you picked a lot better than I did.
Yeah, yours was like a cold bit of tuna.
Raw tuna. not sushi, just raw tuna.
No.
Yes, and then we had a few headlines popping up as we were there.
We did. I mean, what a night. There's just so much to digest right now. But yeah, I mean, whilst we were sitting at dinner, what did we had? We had the Fed.
We had the Fed rate decision, and then Piers shouted to me, "Copper's down 18%."
Yeah.
I said, "No, there's something wrong with your screen."
Yeah, I mean, this copper situation, which obviously we've been discussing all morning, I just find fascinating because it's just the same thing, but just a different asset class, which is where Trump's got people crowded into something, and then just completely reversed it.
Yeah, yet again.
Yet again.
So we're going to get into that. We've got Meta, we've got Microsoft, we've got the Federal Reserve, we've got copper, we've got Shell, we've got Unilever. What else have we got coming up? There it is. Piers through till 8:35. I don't think I can take that much of him, to be honest. And then Dumb and Dumber in at 8:35 with Man versus Machine. You're going to like this idea. Let me tell you in a minute what they've got going on here. 9:10. It's still in Rattigan. I'm actually going to try and talk him into coming in for the All Sessions opening bell with me. So there's two of us there to bring all the moves to you as Meta Microsoft Open. And then at 9:20, from her holiday, Angeline Ong is tuning in to take you through Decoding Crypto. That is episode 3. That's a new one. Right. There's so much to get through. Yeah. I've had enough of your stories, so let's go into overnight news.
Yeah. I mean, that comment from David Boyce is pretty
right.
Spot
on. Okay, yeah, good morning. Boise has got it right. That could be the headline for today's show. Mag 7 doing silly things last night.
Yeah, I mean, it's astonishing. I mean, I've been talking to my clients, obviously, all week, or last week or so, about, thoughts into this 48 hours, which started last night and finishes tonight with Apple and Amazon. But it's just astonishing. I mean, Microsoft in particular, right? Microsoft has gapped up, reversed, and essentially so overbought, so exuberant, and still managed to beat significantly, and still managed another 8% with conviction and volume.
We saw it. It's just 6, and we looked at each other and said, "It can't go any higher than that, can it? It cannot go any higher than that."
It doesn't. Like, I don't often get shocked or surprised that much by these guys, but I must admit, last night did surprise me a little bit with Microsoft. Meta not so much, because Meta's nowhere near as overbought, and it's a slightly different story.
Exactly. Meta, you almost imagine that kind of the expected move for Meta. Yeah. You could completely imagine it.
It's just because it's just the price action in Microsoft, right? It's unbelievable. But again, it also boils down to the fact that if you rewind the clock to however many months ago it was, when Microsoft didn't have a single bid, and everyone was like, the bears were coming out saying, the cloud's slowing down, et cetera, et cetera.
It touched $382 in April, because I was short puts there.
Yeah.
Right, so you can see I had a little crack at shorting them on that first move up. I'm pretty sure that was Piers' idea.
Yeah, well, it was, and so far it's shocking, but I mean, it can't go too much higher from here in terms of just the technical overbought. But if you look at the numbers, problem is that the goalposts have moved, right? So it's trading on 38 times earnings.
On every
It's insane.
Every chart that we show, right, that's only like a 2-week chart. It moved up into numbers and went again. But let's look at the daily. The daily is absolutely mind-blowing. The way that from the last set of numbers, we just saw.
Sorry.
So your dad just checking on you?
My children trying to call me. Yeah, I mean.
So during dinner last night, we're sitting there. And this Muppet, because he's got a copper position on, he was short copper, must have listened to Tom Price on our show yesterday. Not a bad move from the commodity god himself, telling us to short copper. 12 hours later, down 20%. So Piers got excited, knocked over my glass of red wine, and it went towards these poor 2 women sitting next to us, one of whom was wearing a white dress.
Oh gosh, yeah, I remember that.
And so they instantly hated our table until Piers's children phoned him and he read them a bedtime story over a video call.
Yeah, I didn't actually realise that those people were paying attention next to us.
Yeah. Right. So Chris Beecham telling me Vodafone has been cut to sell at Goldman.
We can't get into Vodafone.
We were in the Uber this morning and the driver turned round to us and for some reason thought Piers knew what he was talking about and said, okay guys, can I just please ask you a question? What are the 2 stocks you'd hold for the long term, i.e. 10 years? And Piers gave them AMD, Intel, and I said, no, you want Vodafone. And they both laughed.
Well, for good reason. By the way, do you know what I find? This is the thing. Every taxi I get into, every person who works behind the bar is telling me that without being prompted that they're neck deep in trading.
Yeah.
Right. And that's here in London. Never mind in the US, where this is 10 times more. It's just this is the paradigm. This is what's going on. Right? These people, millions of them at the same time, are just pressing this button buy on Microsoft.
That's it. I'm not surprised that the market is doing what it's doing when you are getting.
When they've got the excuse. Right?
Yeah. And because you've got that in front of you, you can sit dinner and you can try and catch a falling knife in copper.
Yeah, or you could just, everyone else is buying Microsoft. I'm trying to catch a falling knife in copper also. It's just so miserable.
Right, so just to finish Microsoft then, we had revenues of $76.4 billion. That was against $73.5 expected. We had EPS of $3.65, but the CapEx went up from $23.1 billion to $24.2 billion. Now, what does that mean, right? You hear a company say, yeah, we're going to spend $24 billion in CapEx. Shell, $22 billion in CapEx. So
Microsoft, different type of CapEx, yeah.
But isn't that bizarre?
Yeah, but no, I think about this every day, which is that traditionally a company spends CapEx means that they're spending money. So the market has to go, hang on a sec, right? Let's think about this. What's it going to do to the margin? Where's the end game? And net, it's at best a neutral. Something more often than not a small negative for the stock because they're bleeding margin. Somehow Meta, who I think we should probably focus in on here, because they just have raised their guidance, their CapEx guidance, I think 3 times in the last 3 months, if I'm not mistaken. Which is, I just don't understand how they can continue to do that and continue to smash their margins. So
we've just talked about CapEx in Microsoft. We talked about CapEx in Shell in the 20s. Meta are spending a grand total of between 66 and $72 billion on CapEx this year. Absolutely astronomical. It was 65, then it was 64 to 72, and now it's 66 to 72.
They're not even a hyperscaler, by the way. They're not even. That's not even what they do.
So take us through what that spending will actually be on.
Well, it's a good question, and it's a moving target. But I mean, first of all, the hyperscalers, right? So Google, Amazon, and Microsoft, who have the hybrid cloud data centers, they are. That's all well documented. Meta are creating an entire different thing. They don't have cloud data centers. They're not a hyperscaler, but they are outspending the other guys, building their own. I think what they're trying to do is they're trying to build their own internal. The other guys are building data centers to service clients externally. Meta are trying to do it all for themselves. They're trying to become the AI superpower.
Okay.
And they're just building massive data centers, but for themselves, right? Not to service other clients. It's quite an extraordinary situation, actually. They're reinventing, they're making their own thing.
And, in terms of the cash generation of the underlying business, because we know that he tried to do it with the metaverse, and it went horribly wrong.
Yeah.
The market just didn't believe in it. They clearly believe in this.
Yeah, well, I mean, and that's the interesting part, right? It's a delicate thing. When he told us exactly the same thing that he's doing now, there's no difference, actually. It's almost identical. The only difference is this is AI and that was the metaverse. Market hated that, and it got slaughtered.
With good reason, because they just lost $4 billion in the last quarter, Reality
exactly.
Labs.
I mean, so the market obviously loves anything to do with AI because they believe that this is going to be monetized. We'll find out, I guess. But for the time being, they can do no wrong. It's pretty extraordinary.
Right, so that's, well, we looked at the graph of Meta. As we say, you'd feel more comfortable in Meta at the moment, certainly than you'd be in ARM, because ARM announced a CapEx spend and the stock was down 8%.
Yeah, ARM are sort of one of the more sort of realistic scenarios. They're acting like a normal company. Right? They've got a few. ARM's a special situation. They've got big ambitions to be in the CPU part of the data center, essentially taking on Intel. And they obviously have the intellectual property. We all know that, but they don't have any. They're completely fabless, and they have no actual hardware of any description. But they're desperate to get into the chip game.
Okay.
So I think the cost is the market's a little bit. It's also a very expensive stock, so they have to beat and raise, and they can't be telling us that margins are hit. So it's a little bit of a special situation. This one. But again, they're spending money on capex, and the market sold them off. If their ticker code was Meta, it would probably be up 9%.
Yeah. If it was in the Magnificent Seven. Yeah. So guys, I think for this morning, there's so many things out overnight that we'll focus on the overnight news until we get the opening bell out the way. And then in fast markets, we'll talk about all Piers's other ideas that we have, that we've covered recently. Of course, Marvell, a lot to talk about there with yesterday. Intel, thanks for that one. A lot to talk about there. So we'll cover those at 8:15, but let's go on to the Federal Reserve, because the Federal Reserve out last night, Jerome Powell not taking any shit from Trump, but two of them did. The first time that there's been two dissenters since 1993. That's right, Christopher Waller and Michelle Bowman voting for a rate cut. And Powell said he understands why they are making that argument. However, it's irrelevant, because there is no rate cut coming yesterday, but also don't expect one nailed on for September. September now 50-50 chance, down from 68% chance the day before.
Sorry, this question from David Boyce asking me, how does this impact my QQQ short? My QQQ, I assume you're joking, but my QQQ short is a hedge against the book, which is up $3.5 million. So,
your PA one, yeah?
Yeah, it's not real money. It's for clients, but that's the answer.
Cool. Jeez, copper just went through.
Oh, mate,
440. So, if anybody's wondering. The copper price, obviously you've got COMEX, right? And then you've got LME. How does COMEX marry up to LME? The story in copper last night was that, yes, Trump is going ahead with the tariffs. However, only on pipes, wires, rods, fittings, and other semi-finished products. The copper tariff of 50% will not be on refined copper, such as ore, concentrates, and cathodes. That's what the market was pricing in. That's why COMEX was trading at a 25% premium to the LME. So let's take a look at those two there. But what does that 440 mean in regards to this LME price? Why is one down 21.5%? Ooh, painful. And why is one only down 1%? Well, it is the following calculation. You take the COMEX number, right? So that's the 440. So the price on there, put a decimal place in, is $4.40 per pound. And then you multiply by 2,204. 2204, you can call it 2,200. That's your number, which takes the weight of pounds into a ton. They're both in dollars. So that means that the two are now trading roughly around parity, within 1% of parity. And that's why you've got one down 21%. So as Piers said, Trump set everybody up and then completely reversed the decision, causing a now 21.7% drop. Is this intentional, do you think, Buckworth?
Who knows? I mean,
it's continuous from him.
I find it just exhausting. But at the same time, it's not ridiculous to say that you can trade what Trump does. Like it is so predictable. But what I find amazing is that people still continue to get themselves offside. Why are you max long copper? Like, as if he's not going to walk this stuff back. As if he's not going to do that, because it's going to cause a spike in a key commodity price, and it's going to cause pain. And he's not an idiot. He's always going to walk this back. That's why I was short, although it was just tiny.
And nobody was benefiting from it. That's the bizarre thing.
This move suggests that the market was max long copper.
Yeah, definitely.
Why would right after the move we've seen, the market was still max long copper? I don't get that. I mean, even Goldman came out the other day, 2 days ago, and they wrote a note saying, actually, there's risk to the downside of what we've been thinking here, because he's obviously going to walk this back. He's speaking to Chile. You know, they kind of had a small soft warning for what's just happened.
They have been very good in it, actually. They're not so good in Vodafone, but they're very good in copper.
No, I mean, they've made some good calls, but I don't know. Who knows what the positioning really is? But the price action would indicate that the whole world was long copper and have just had to pull their positions.
Well, and that's the thing. When you get a move like this, right, this is like the Swiss bank unpegging against the euro, right? You get the overextension of the move, so the positioning has to be reversed. Therefore, I have been buying some copper all the way down from 452, 448, 444, and now 440. Didn't think it would go this far, I must admit.
It's not that much fun.
It's not. The two of us have been picking up.
The two professionals are just getting hosed.
But in light of that, we also had a move on gold. Gold last night dropping significantly because of the expectations on higher for longer. So let's just have a look at the way that gold has come down over the past 24 hours. Remember, tighter monetary policy is negative for gold. In theory, it's also negative for equities, but
yeah,
you know.
Well, yeah. I mean, I'm not convinced that gold trades off this traditional
metrics
anymore. Quite frankly, I think it trades off the U.S. balance sheet.
So commodity gods. Tom Price that we had on yesterday that called the short in copper, he said he thinks the Chinese might be continually buying gold to then back the renminbi to try and, in the future, long term, rival the dollar.
Sounds good. Well, I mean, it sounds feasible.
Yeah,
there's obviously a lot of stuff going on behind the scenes with regard to that cross-border relationship and the currency. So perhaps, yeah.
Right.
So Intel. Questions on
yes, Intel we'll do after, because I don't think there's any news overnight, is there?
No.
But there is news overnight in Nvidia.
Is there? Oh yeah, you mean this morning? You mean
the Chinese? Yeah.
Yeah, that was this morning. Yeah. Is it news? I don't know anymore. I mean, when it's if you rewind if depends on the moment in time. But if you read a headline that says China are summoning Nvidia with regard to security risks over their H20 AI chips, which is essentially just the continuation of the tit for tat between the US and China in this tech trade war, and just a reminder to us all that it has not gone away and it's not going away. But nonetheless, the market just doesn't care at all. I mean, the AMD and NVIDIA are obviously right in the same basket. They're both absolutely overbought, redlining it. You get a headline that they haven't moved at all.
This should be a down 2%.
Like, especially when we're in a market now. You can probably sense the frustration in my voice, which is just stupid. Like, lost all. I mean, Microsoft and Meta going up on their earnings. That's fine.
Yeah.
I'm talking about everything else that's going on. It's just the market doesn't care about anything. Nothing.
There's conversations. I've had conversations with 5 people that I truly respect their views in markets, and that's in the last probably 5 days, and they are all saying that this is a top, whether it's a short-term top, whether it is, top
it won't be the top, but it should be a short-term top. And it's so very hard. It's becoming increasingly difficult to. Usually, all the signals that I look at work quite well, and in terms of me knowing we're probably like when all the alarm bells go off for me, it's usually within 2 weeks.
Yeah,
2-3 weeks, maybe 3 weeks. This is a slightly different scenario because we've suddenly got this huge week of macro and earnings, so it's kind of potentially a bit more extended. But the nature of it and the size and the scope of the positioning that we're situation makes it extends that period of time. I think which makes it even more frustrating. But I'm just struggling to see how this can continue too much longer without a pullback.
So there's very good precedent, and the precedent that I feel that this is like at the moment is...
There needs to be a catalyst there. This is the problem.
January 2018, one of my worst months in trading, but it certainly taught me a lesson. And there it is. Now, it doesn't look like it's big there on the chart, but that's because I've taken it back right to the day that Trump was elected. Now, Trump was elected here, and you can see we just had one way all to the top, not just a mountain, but a cliff face. And then in one day, we saw vol double, right? Volatility doubled. And it was when Jerome Powell said rates are staying for longer. They're higher for longer, or need to start tightening monetary policy, which is basically what we had last night. Sosnoff is talking about black swan events and how to prepare for them in vol world, because he sees volatility so low that's when you're in the danger zone. Vol is low. The market has just gone up for such a prolonged amount of time. Very intelligent people, such as my good friend at Goldman's, saying that, this is the top. This from every past experience that we've seen, this is where
the top or a top. Calling the tops, that guy Chris Wood
top for 3 months.
Chris Wood came out when we were in the doldrums in April and said, we have reached the all-time highs for the US index. I'm like, what? It goes up every year since the dawn of time, 7%. Anyway, it has to be some sort of top. I mean, I don't know, maybe not, but it's the rule books are kind of being ripped up and thrown out the window.
Well, that's it, because the algos are taking over, and that's why
the human participation is about. On some days, it's less than 10%.
Yeah.
So, I mean, therefore, we're in the hands of.
It's about my percentage in our conversation last night, because you were chatting so much rubbish.
Christ.
So we go for dinner. He has a beautiful veal Milanese. I have my not so good tuna. So that's probably, I don't know, 6:30, 7 o'clock. And then we go home. We're home just in time for Microsoft and Meta coming out. And he wants to order a takeaway. Because he still isn't satisfied. Yep. What's the additional meal?
Still got the appetite.
Right, it's time for chart of the day. What country? It's a UK stock today.
Oh, God.
UK stock. Well, that's you out of the game.
That's me. I'll go to sleep.
Right, let's see who gets it first. He's been playing around with meme stocks the last few days, so he's probably gone for a kind of mid-cap. Producer Phil thinks that he wins if nobody gets it.
Oh, okay, cool. What's the stock?
Right, 3, 2, 1, let's go.
all session.
Well done, Gavin Ackers. You beat us there. Hamish, very close between the two of you. It is, of course, Tesco, where you get your best clothes. You're a Tesco man? Piers, you're more,
What, are you talking
more
about?
Lidl, aren't you?
Actually, yes. Why, Lidl's actually
Great, I tell you what, great performer. Since 2004, £2.24, £2.80 to £4.30. That is decent from a company that's got 3% growth.
I don't understand the UK supermarkets. I mean, I understand that they're. Don't ask me for my view.
But incredible.
But I do find it fascinating. I think it's probably more to do with the fact that it's only one of the few stocks in the FTSE that you can actually trade, and therefore too much money chasing too few stocks, so they have to buy Tesco. That would be my summary.
But yeah, Gavin Ackers just beating Hamish are two out there, and then Boise just copying Gavin Ackers. Hey, well done, Boise. 2 minutes later. I'm getting them back
these
for
crazy markets good for spread
calling out your
betting companies?
QQQ short.
Oh, sorry, yeah.
Right, let's get ready for that bell then. You're going to ring the bell this morning,
yeah.
Piers. Is this the first time you've rung the bell?
No. I don't have
You've been in once before.
I've rung it quite a few times. It's quite a
Because you're for the old sessions.
inflating bell noise there, but here we go. Ready? Are we ready?
We are. So, opening the London Stock Exchange for the last time in July is Mr. Piers Buckworth.
We've got 10 seconds.
Not the biggest fan of UK stocks. So this is not an honour for you. Your brother has actually rung the bell for the New York Stock Exchange, hasn't he?
He has, yeah, the NASDAQ, yeah.
Or was it NASDAQ?
There we go. We're open.
Do you know you don't hold the bell when you...
Yeah, well, it's whatever. So this is about to fall off. Bell end.
Right, Mondi. Oh, that is a bit of a paper cut there. Down 4%. Mondi, painful, 11.20. Then we've got Lloyd's hurting, down 80 basis points as well. Hammerson, bad, on 2.3. Just to give you the reason on Mondi, that is on the back of H1 results. Underlying EBITDA was 564 versus 589 estimate. So poor results for Mondi, missing numbers. Then we've got British American Tobacco down 1.8%. That is on the back of their H1 results, but it had a huge run into it. We've got adjusted operating profit 5.39 billion, which was higher than estimates, and they see adjusted operating profit up 1.5 to 2.5. So BAT's giving back some of its big gains over the past few weeks. Then we've got Whitbread. Whitbread are weak, down 1.6. Not quite sure why Whitbread are so weak. But let's see how these miners are doing with that huge move in copper. There it is, Antofagasta, the Chilean copper miner, down 5.5%. Glencore, down 3%. And it's interesting because Glencore hadn't really benefited, but hopefully not caught on side on the back of their trading. Piers, run us through some more of the big moves you see on screen there.
Yeah, well, beyond what there aren't really many, to be honest, beyond what you've just said on that screen.
Vodafone down 1% on the back of the Goldman's downgrade. Don't know what they're talking about. Diageo, £19.16. I'm hearing Rio Tinto is still in auction.
Is it?
Why is Rio's should not be hit as much as Glencore, so I'm not sure why. Unless, sorry, I didn't actually look at iron ore. Let's see what iron ore did overnight. Yeah, down 1%. So not sure why Rio's is still in auction there. Which one, sorry, Phil? Rolls-Royce still in auction. Rolls-Royce had numbers, sorry. Wow. Rolls-Royce is looking stronger with an H1 results of 9.06 versus 8.8 billion revenues. Raises their adjusted operating profit forecast to 3.1 billion from a range of 2.7 to 2.9. So they're now 3.1. So that is a 15% upgrade. In Rolls-Royce, you're going to be happy. Kate Murphy this morning, with a big percentage of her portfolio still in the stock from buying it at £1.20. Wow.
What a trade that's been.
What a trade that has been. What are the other strong performers? They are Shell. Shell up 2.2% on the back of numbers. And next as well, good H1 results. It is the biggest day in history of reporting on the LSE. Next upgrades its full year PBT guidance by another 2%. Stock up 1.6. These are, you belittle the UK stock market. There are some incredible stocks on there.
Where?
Look at Next over 20 years.
Next. Good
right?
I mean, what is... Yeah. I've never even looked at the chart for this.
This must be the best CEO of all time. Sir Simon Wolfson. Look at this stock going back. This is when I started in the city here, trading Next.
Wow.
April the 5th, 2004. And it was at £13.27, now at £125.
What's the liquidity like in that?
Oh, as much as you like.
Yeah.
That's
what I thought.
Right, so Piers clearly doesn't get his clothes in Next. Before Rolls-Royce opens in 1 minute, let's have a really quick look in Europe. It is the French bank, Société Générale, up 8.4%. Forget your Metas and your Microsoft. All you need was a French bank. Air France up 2%, as is L'Oreal. And the car's having a good day as well. Oh, Anheuser-Busch InBev. Piers, this is because you've stopped drinking. InBev down 9%.
Yeah, well, I mean, I suppose the interesting thing going on in this industry, and I have no idea whether or not whether it's hitting their numbers because I don't look closely at these stocks, but there is obviously a generational cultural shift going on, and these guys are having to move and having to adapt to the moving target that is less drinking of alcohol.
Rolls-Royce open up 7%. Rio's down 5%. Rolls-Royce up 7.4%. New highs. Well done, all of you. Well done, all of you who have called this stock perfectly. I've never seen one negative person on Rolls-Royce in our community, and I really hope you've all got bucket loads, because that is one of the best performers in UK FTSE 100 history that I can remember. The stock going 10x.
Yeah. As
big as Rolls-Royce.
Yeah, I mean, I'm just filled with regret, Rich.
At not being long rolls.
Well, because it's one of these examples of this. I haven't really dabbled too much in UK stocks over the years, but I made one big call in 2015, which was this.
Right.
And yet again, just all that was required is to just buy it, put it in a portfolio, and don't look at it.
Yeah. And
you end up very rich.
If I can manage your pension if you want. I'll just take all your ideas.
I would appreciate that.
I'll put them in there, and then we'll just never sell them.
That would be a good strategy.
It would have done remarkably well.
Yeah.
This stock is not stopping. 10.75. It's gone another % since it opened. Yeah, remarkable. 10.75. Yeah, Kate Murphy, there she is on the chat. Good morning to you. Kate's going to be sitting there updating her portfolio. It's probably on a 15-minute delay, so you might have to wait 15 minutes there, Kate. But well done you this morning. Absolutely fantastic. Right, Carlo Verda in Rolls-Royce. Go on, tell us where you bought your Rolls-Royce, people. Carlo Verda purchased this at 70 pence.
Okay.
4 years ago.
Wow, nice.
God. Well done. Right, let's get back to Rios then. Not such good news if you're a Rios shareholder. All these miners are getting cuffed. Rios, another one that Tom Price told us to avoid yesterday. Well, he's got a 5% discount on it today. So he told us to wait 2 months. We only had to wait 24 hours. You get £5% discount. Antos, I do not understand why Rio's is down so much. They do have an American copper business, and Freeport McMoran was down 10, but Rio's down 5.5%. Copper is only 20% of its business, whereas Antofagasta copper is 100% of its business. Glencore sub £3 again. BHP down 3. Anglos. Anglos, I might. Ugh. No, hold back. I was going to buy some Anglos, but let's let it wash out first and see where we end up. Vodafone down 2 now.
If that's not a washout in copper, I don't know what is.
Yeah. Well, then copper's a washout. The stocks didn't move that much higher on the back of this prolonged. Glencore, I understand, because Glencore have got a trading business, but they may well have been short copper.
Yeah.
You know, the chances, if somebody's going to know what the president was thinking, it's probably Glencore.
Yeah.
Right, what are we on? We're on 809. Oh, it keeps on going. Rolls Royce up 10. St James's Place up 5.7%. That reminds me, I've got to take my pension out of the S&P 500, seeing as we're at top. Shell up 3%. And BAT's now up 1.6. That stock just moved from down 1.8 to up 1.5, Piers Buckworth.
Yeah, it's quite
smoking.
Quite extraordinary. I mean, there's a lot going on today in the UK market with the. What did you say it was a record day, earnings-wise?
The most large cap earnings that have ever come out in one day.
Wow. Okay.
Lloyd's. Sorry for those of you that own Lloyd's. I did say it was down. It is because it is ex-dividend. So Lloyd's ex-dividend 1.2 pence, and that explains why it is lower. What is the FTSE doing? Now you see the FTSE is up 40 basis points, even though you've got mining stocks down between 4 and 6%. That shows you that the mining industry does not affect the FTSE as much as it used to.
Yeah, correct.
Sorry, are we keeping you awake?
Yeah, sorry. Well, that's the UK market. Mate,
that's what I was doing last night while you were chatting at dinner. Was I managed to stifle my yawns.
Yeah. Yeah, I mean, that is interesting. I mean, the composition's obviously changed quite significantly over the years, but the yeah, it hasn't had too much of an impact. Rolls-Royce is just, I just find it extraordinary. It's got another 10% in it today.
So that taking the FTSE to new record highs. That's right, people. We've got the mining industry down 4%, and the FTSE's going to new record all-time highs. The German DAX up 40 basis points. We've got the Euro stocks. You can pop this up on the screen. Thank you, guys. Bitcoin up 1.2% there at $118,000. Gold holding the 33, and down 21.8% is COMEX copper. We shall see you in 3 minutes and 6 seconds for Fast Markets. Let's update you on Intel. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Am I actually going to drink that?
Right, fast markets. We got 5 stocks to get through, so we're going to wake up the man opposite me because, as Ollie says, bring some coffee into the studio. There is producer Phil.
Good morning.
I don't think we can. There you go. Thank you very much.
Like some strong.
I said a cappuccino. I did say Americano. Let's have a look at Novo Nordisk. Can't even say it.
Novo Nordisk. Okay, well, I mean, this is more interesting. This was without doubt Europe's most phenomenal stock market darling, maybe ever.
Yeah.
And then we had the moment when it was the largest that day. I remember that day up at the high there when there was that big FT article on how they were the largest company in Europe, and that moment. From that day till this day, it's been under enormous amounts of pressure. And obviously that all culminated yesterday with the new CEO, who was, there was a lot of speculation as to whether they're going to bring an outside CEO in or someone from the internal ranks. They brought someone from the internal ranks, which was not very well received, on top of lowering their GLP-1 guidance, which is not a surprise. I mean, the growth rates were astronomical. Now there's a lot of competition in this space, so they are a leader, but nonetheless, there's the slowdown is. But this is what happens on the other side of the coin, right? Of people crowding into something that's a massive growth story, and then the growth obviously not being there anymore. I am a little bit surprised to see how aggressively it got sold. It deserved to get sold, but if you consider how much selling we've already seen, I think that it's overdone. So I mean, just from a short-term trading perspective, it looks to me like a nice little buying opportunity. That's certainly what I would do.
Not financial advice, of course,
not financial advice, but no.
I have on the ADRs. Let's look at the ADRs there, because Chris Beecham, even not often does Chris Beecham say, "Cool, I think I might have some for the pension there." Chris Beecham likes the look of Novo's because it has gone into value territory. So yesterday I sold the 45 puts for September, right? So Novo's trading at $50.30 in the US. I sold the 45s to buy the 55s. So bought the 55-70 call spread, and I will be long at 45 when they get there, because it looks like they're going there.
I really hope not, but yeah.
Yeah. Right, let's talk about the other side of the coin then. Boise, his reaction to the QQQ short was because it is a hedge. He's long Marvell, long
so
a few others, but you need a hedge in a portfolio because it's a long short portfolio.
Yeah, sorry.
That's why he was laughing.
Sorry, understood. Sorry, the key. I mean, I would hope if I was naked short QQQ as a tech specialist in this market, I think I probably need my head looked at. But it's just, and I need my head looked at having a hedge on the book. Never mind.
Well,
but yeah, I mean, the book that I run for clients which is a dummy portfolio, is obviously packed full of longs.
And this is one of them, Marvell.
And this is one of them. This is definitely one of them. And this is a stealth name that it's just going to, I would imagine, just continue to have little days like it did yesterday where, I mean, the news was there was two bits of news out yesterday. One was a deal they did in Korea, and the more important bit of news, which I actually didn't find out till later in the day, was that these guys do a very, very specific high bandwidth memory custom chip. We don't need to go too much into further detail than that, but it's a specific niche market, and they've now adapted their chips for the AI product, for the AI space.
Wow.
Microsoft, according to a note last night, are leaning in more aggressively to Marvell on their product. Long story short, their product is in demand from one of the biggest hyperscalers in the world.
So they are Microsoft's go-to person
On this
for
product.
this specific chip.
Correct. And there should be, and that's precisely what the CEO said on the conference call. He said, "We are the only game in town for this particular product, and they're going to have to come to us." He said that 5 weeks ago, something like that, and that's been endorsed now.
Yeah, it would have been.
It was.
Start of
It wasn't an earnings call. It was just an impromptu at Bank of America conference, and it was about 6 weeks ago. It doesn't really matter.
I think that would have been around the $70 mark.
It was something like that. But anyway, it's so far it's doing exactly what I sort of hoped and expected it to do. But nonetheless, there's going to be drawdowns and there'll be weird days here and there. But
it has closed that gap, or it did yesterday.
The technicals are holding in there quite nicely.
Yeah, and you did say that last week. I think it was actually it will close that gap.
Yeah, I mean the gaps they just close.
Yeah.
Such a high percentage of the time. If only the Nasdaq would close that gap.
Right, we've got to look at Intel as well, though. You were good enough to send me a voice note explaining what had happened. So let's go through Intel there. Now, this is a long-term 12 to 18 month story for you. But what happened on the numbers last Friday?
Well, it was interesting. I think they beat top and bottom. They raised their PC guidance. So when we were watching this come in, it was quite a surprisingly good report. Then we got to the conference call, of course, and the new CEO Lip Tan Bu did not convince the market quite yet as to. Listen, he's turning an oil tanker around, and he's pulling them away from their legacy business that they've done since the beginning of time. Right?
Yeah.
They used to be the biggest foundry in the world, and so it's quite a big deal for them to say we're not going to do that anymore.
Is it a gamble?
I don't know whether it is a gamble because they're not shutting it completely; they are just scaling it right down. So perhaps it's a bit of a gamble, but I think it's what needs to be done, right? He's focusing on AI and next generation chips.
Yeah.
Hello, it should have been done a while ago.
He's taking Intel into the 2030s.
Yeah, he is. And listen, they have the intellectual property, they have the leadership, they have the balance sheet.
Well, that was my next question.
Is do we have the time to wait for them to do it, right?
Yeah. Do investors have the time to wait when? There's such big stories going on everywhere else.
There is lots of other things to be caring about, and do not touch Intel if you want this to go up in a nice, pretty straight line. It's just not going to do that.
Okay.
But you're going to kick yourself if you're not long, and there's a multitude of things that can be announced in this company,
Yeah.
including spin-offs, deals with the AI chips, with their CPUs. It's anything could happen.
Well, as we know, anything can happen because me in Ibiza looking at my stocks on the Sunday, noticing this one was down 8%, then we do our best here to give the information in your wisdom, not necessarily my wisdom, but I managed to pull the wisdom out of you, and it can go wrong in the short term there, as we've seen in Intel. So that is a long-term one.
Depends, wrong. But I mean, personally, I wasn't involved in the stock into the earnings report because I assumed the earnings report would be at best very noisy.
Now, look at this. This is AMD.
Oh God.
And
by the way, whoever on the show, if they're listening, I hope that they did what I didn't do
and got involved.
When someone asked me what stock would you put in your pension.
Oh, that's right. That was your
This
first.
was the number one stock that I told them to put in there. I didn't.
That was the first time you came on, wasn't it? They said, "What would your call be for the long term?" And it was at 110.
Yeah, it's just a casual 80%. Yeah, this stock is astonishing, extraordinary. It's getting a little bit crazy now, though. To be honest, it's going to go to 200. So I'm fairly certain that's good. It just wants that 200 level. Question is, they do it today.
Yeah, because you really feel this is overbought in the short term.
Just from a technical perspective.
Yeah.
I don't think this company is overbought at all. I think this company is going to take market share bit by bit from NVIDIA and get their market share up to like 20% from 7%.
Would you have a pair
GPU.
trade?
Yeah, I've put that short NVIDIA, long AMD trade on a few times before. It doesn't work that often, but it's worked really nicely in the last sort of 6 months. AMD's up over what? Went from, where did we get down to? 80?
Yeah.
80 to 180 in the space of 3 months?
Yeah, 4 months.
Yeah. And this is a $380 billion company, by the way. It's not a small cap.
And it's always quite nice just for your mindset when the stocks are roughly the same price if you're putting them on in a pair, because you know that AMD is trading at a 3% premium, share price wise, to NVIDIA just now.
Yeah.
It's putting on the pair here is tricky though.
I wouldn't put it on right here.
You'd wait for AMD
because AMD can have a 5, 6, 7% down, Dave, with no excuse, reason whatsoever.
Well, there we go. When AMD is at a $7 discount to NVIDIA, then I think I'll look at the pair there.
I would say this pair, these two companies are if you asked me what two companies do you know the best in the world, it's these two companies. Mm-hmm. And the pair trade I know like the back of my hand. It's not a particularly profitable or good thing to do. I would leave that trade alone.
Right.
Yeah, it doesn't work very often, and it chops and changes, and it's not a profitable thing to do. I've tried it many times.
Yeah.
Usually long AMD, short video, but even when you try it the other way around, something will happen. AMD lives in its own universe, by its own set of rules. It's a weird stock, and this is a great example of that, right?
Another stock that lives in its own universe.
Can we just take this off the screen?
Palantir.
I want this to not exist anymore.
159.
Yeah,
so it's been up there. It was up there the other day, but there was some negative news in it, and it went down for 20 minutes.
Yeah. So the Department of Defense are looking at some of the other AI providers because Palantir don't have a cloud product, right? They have, and whereas the likes of Snowflake and OpenAI, Microsoft obviously have a cloud and an AI product together, which actually in theory and in practice is a better thing for the customer. So it's no surprise that the Department of Defense, who are their biggest customer, are looking at potentially moving or diversifying their business out to some other people.
Yeah.
That should be, when the stock is levitating on 119 times sales, a moment where we have a little pause. But no, we get 3 more upgrades in the next 48 hours from Muppets who have not said a word until now.
Yeah.
And it just makes me, it shouldn't bother me so much, but it really does. It's just like, what are they doing?
So on that news, the stock dropped from 158 to 150. Sorry, I'm looking at the wrong thing. Ha! I thought I was looking at the... There we go. The stock dropped from 160 down to 154.5. Right, and that's what we kind of had been waiting for. That sort of negative story just to cause that initial move, and then it sells off another 4%, because that's generally what happens when you get that sort of negative news on an overbought situation on a very a stock that is at extreme
And that boils down to people sitting on their mobile phones and pressing buy on dips. That's it.
Yeah.
And that is it. You've got to remember who's trading this stock, right?
And the momentum algos are
remind
in
myself
control.
who's trading the stock, because it's literally machines and retail people. That's it.
But yeah, momentum is definitely in control of stocks at the moment. One of the reasons why you see Novos continue to sell off is that the momentum's not just one way. If they see a negative momentum, they push into that as their short position as a financing trade. One good move that I've just seen this morning is we've got ASML. ASML bouncing at last after...
Yeah, well, they've got some good news, because the trade deal between US and Europe includes the removal of the chip restrictions, which also in turn means that the customers of ASML who have held off with their orders in order to wait for more clarity on the trade deal, in theory now will put those orders through, which is the lumpy orders that we've been waiting for. So the implications for ASML are pretty significant. I actually added this back to the book after having got out of it the other day.
Because the problem with the numbers was that it was just timing around orders, wasn't it? And
well, yeah, I mean, ASML is a special situation, right? They have TSMC as their biggest customer, along with Samsung and Intel, the other two foundries, who order these very expensive high-end machines, but they order them in batches and it's lumpy, right? And they're very much hostage to their one product that they sell.
yeah,
Whereas the other guys, the Lam Researchers, the KLCAs, the Applied Materials, who are in exactly the same game as them, they do a more commoditized product and a slightly less high-profile product, but nonetheless, it's a much more consistent business. Okay. So you can't, when you look at the chip guys, the chip equipment guys, there's 5 of them. ASML's slightly over here versus the other guys that are here. They're slightly different kettle of fish.
Right.
But I'm warming up to this again, just purely on the basis of what I said.
and as a relative against overbought.
I also love, as you probably know, a positioning story when the timing's right. You have to be careful with that. And there's a lot of these going on right now. Like Kering is a great example, right? Kering is just continues to get bought. They had horrible numbers and they went up on the horrible numbers, which is a wonderful sign.
Yeah.
Gucci was down yet another 26%, but that doesn't matter. The question is what's priced in and where are we going from here with this new CEO? And the answer to that question, my opinion, is that the worst case scenario for Kering and Gucci is priced into the stock.
Yeah.
And we're in a world now where the markets globally, whether it be Estee Lauder or Nike or plenty of other examples, big brands that have been in the doldrums for a long time, that are being bid up, regardless of the news being good or bad, because of purely on a positioning story.
Apart from Adidas. Yes, yeah. Adidas, poor numbers yesterday as the shoes are old-fashioned now. Everybody's moving back into the Nikes. That's right, that Nike Adidas pair trade really paying dividends. But talking about machines taking over, are you ready for our next segment, Piers?
Depends what it is. What is it?
Well, we're letting you go. You've done your morning shift.
Okay.
In are coming Martin Harris and Aaron. Now they've set up a game, and their game is that they've asked ChatGPT, please construct us a portfolio.
Yeah.
Right. What would ChatGPT? What would your idea for the perfect long-term portfolio be? And then they've taken that and they've adapted it themselves to try and beat it.
Okay.
So we are going into, in a couple of minutes, man versus machine. Do you think that our two portfolio managers will beat AI portfolio manager?
Over what time period?
Well, probably be the next 6 weeks.
I'd have to know the humans involved to answer the question.
Yeah, fair. Well, you can watch the next segment. You guys can also judge yourself. Piers, thank you very much. It's been an absolute pleasure to speak to you for the last hour and a half.
3.5 hours.
Not sure about the 5 hours I had to put up with you last night.
It's a pleasure as always, mate. Pleasure as always. There's a lot going on.
And sorry, was that thanks for dinner?
Yeah, and thank you very much for dinner.
Thank you.
Very, very, very generous of you.
Yeah, like, subscribe. If you like Piers' calls, then give us a subscribe and we might invite him back. If you don't hit that like button, no more Piers. The judgments, I need to see 25 likes on this page to even consider ever having, yeah, people have just removed their likes from the page.
Get them off.
Let's see, what are we at the moment? Let's see if we can... Thumbs up for Piers. We're on 11. If you want to see Piers on again, hit that thumbs up button on the YouTube, please, people. Otherwise, it's been nice knowing you, buddy.
Yep. That's a true pleasure.
We'll see you in 2 minutes.
Okay, guys, before I teach you how to use this, I have to teach you how to use this, the mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, the minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hi, good morning everyone. Welcome back to Trade Live with IG. This is actually a new segment. Once again, joined by Martin Harris. I'm Aaron Bright, for those of you who don't know me. And this is week 2 of Man versus Machine. So what we plan to do in this segment, new little series on Trade Live with IG, is to prompt ChatGPT to build a portfolio. That's the machine. We're the two men, the man of the man versus machine, the two of us involved. And yes, we're trying to beat a ChatGPT portfolio that it builds and see if we can beat AI. Just to put out a disclaimer, this content is very much created for educational and entertainment purposes. Nothing discussed in this show should be construed as investment advice or relied upon for investment decisions. And so please do not invest based on what we're talking about. This is just purely for entertainment purposes. We've asked ChatGPT to give a couple of suggestions, and we have a couple of rules which Martin's got.
Yeah, that's right. Thanks, Aaron. So let's quickly go over the ground rules. So the rules are very simple. In each week, we give the basic version, the basic unpaid version of ChatGPT 2 prompts. Yep. The first prompt is to provide a comprehensive market analysis over the past week, and the second is to build a portfolio based on the analysis. So in week 1, which was our foundation phase, we gave ChatGPT those 2 prompts to create the baseline portfolio. So first we asked it to analyze market conditions as a UK investor, and then we got it to pick a portfolio. From there, you and I then went and took that portfolio and enhanced it using our own investment analysis to try and modify it into a portfolio that could potentially beat AI.
We essentially wanted to match the asset allocation, which was broadly 80% stocks, 20% cash. We had a look at that, through ETFs, through stocks, and thought, how can we put our flavor and our investment research into it to provide alpha over a benchmark?
Yeah, right. So, and I think a lot of it was that we were looking to take the same trend as what the AI portfolio was doing. Now, moving on to week 2, and every week going forward, we're going to repeat those same 2 prompts. So the first prompt being, give us a rundown of the market over the last week. And then prompt number 2 is now, based on this market analysis that you've provided, do you want to make any changes to the portfolio? And some of the constraints that we have given is that if ChatGPT does want to make a change, a maximum of 20% can be changed, and only on a recommendation that it wants to make. We're not forcing it to make a change.
We're saying essentially, do you think you should make any changes? Which is quite important, because I think with most AI chat bots, it will, if you can sort of guide it to do certain things. So we're letting it be autonomous in this scenario for the segment's purpose. We thought it'd be a good idea to run through what, essentially, when we asked it to provide a comprehensive rundown of market conditions in the UK, we thought it'd be a good idea to sort of explain what ChatGPT provided. So one thing it spoke about a lot was, central banks, monetary policy turning accommodative. If you wanted to touch on anything regarding monetary policy, it's a super interesting area at the minute.
I think really what we are seeing is, ECB last week holding steady. We're also seeing Jerome Powell looking to keep rates unchanged at the moment, but we are expecting cuts coming in.
Yeah. The question is, it's August, September, or November, and it's whether there's going to be two rate cuts, whether they're going to come to fruition, and whether markets are going to get these 2 priced-in rate cuts. I think when it comes to interest rates and how investors can price them in, particularly in the swaps market, we've noticed that they can be, for years this has happened, they can be very over-excited with regards to how they price in rates. So they can sometimes be too keen to price in cuts. We saw that particularly at the end of 2022. Throughout 2023, cuts were being priced in quite rapidly, even though inflation was high. So it's something to keep an eye on, and that's likely to determine how equity markets.
Yeah, and this is all really about the inflation story. I don't know if you want to give us some insights into that.
Well, yes. Inflation both in the UK and the US has come down from massive highs, which we saw throughout 2022, parts of 2023. But I don't think the battle is fully over yet. We're seeing very high food inflation in the UK, even though energy prices have come down a little bit. And another area of concern is certainly the core and services inflation in the UK, which has been sticky for a while, and that's a really significant component of inflation. So, if rates are cut too rapidly, I think there's concerns that will creep up again, and that's something that the Central Reserve want to avoid in the US and the Bank of England want to avoid in the UK. And in America, they've got a more of an issue with core inflation. Even though the inflation rates between 2 and 3.5% sort of fluctuates around that figure, the underlying figures always need to be looked at with regards to what's under the bonnet when you look at the inflation figure, what's driving it, and how much is this changing over time.
Yeah. So I'm hearing a lot from you. I want to see what ChatGPT said.
With regards to
the market update.
Well, with regards to the market update, they're talking about US-China escalations, particularly with trade, inflation shocks, which we mentioned, currency volatility.
There we go. It's back up on the screen.
Which is something which is been quite significant this year. Equities, they're talking about the FTSE underperforming over the past week or so. So ChatGPT was sort of looking at the last week in terms of how it was, constructing this portfolio. It was talking about a little bit of underperformance from the FTSE, mixed equity returns, particularly in global US and European equity markets, and also China's economic slowdown. It was tough.
Yeah, I see. All right, China's economic slowdown hitting UK exposed names like miners and luxury stocks. Interesting to see the luxury stocks coming in there. I think we've had Kering in the last week with results, big concerns around the Gucci brand. China being a primary destination for them for the luxury names to sell goods. And that's been weak so far. So certainly, it definitely picks up on main trends that we are seeing. And again, the US dollar weakness, which has been, had a lot of impact on the commodity companies who are obviously earning in dollars, then having to convert into sterling, and then losing on that currency adjusted basis.
Exactly. I'm getting a question from the gallery: who's winning? Should we reveal now, or should we wait?
I think that if there's one thing that I'm noticing that ChatGPT did not discuss at all, which I'm surprised by, is the EU tariff deal. So very focusing on central banks, it does talk about global trade tensions, but now we've already got an EU tariff deal which heavily favors the United States. Very sort of concerning for some EU exporters, but it does bring a lot of stability now to sort of trade tensions between EU and the US.
Great. With that being said, we are being pushed by the gallery to reveal who is winning. So I'm going to give a quick run through of the portfolio, which should be on screen now. So this was the portfolio that AI built last time. So if you didn't see it, here is the weightings, and there's a pie chart up there. Quite heavily weighted towards clean energy, a little bit of emerging market exposure, and it's chosen a few stocks in defense and a clean energy as well, with 20% in a cash position. We have our human portfolio, which, as Martin spoke about earlier, we looked at what ChatGPT built and thought, okay, how can we enhance this and use our own research to build something which we feel can beat this portfolio. So we've looked at things from a very geographical perspective. We've got areas such as the FTSE, European exposure in the portfolios to a European tracker ETF excluding Europe, and we've also gone for sort of more thematic exposure, but in the context of having an ETF rather than just picking a few defensive stocks.
Yeah, so I mean, we added gold as the obvious diversifier. That was something that ChatGPT didn't include. We put in Chinese media as a theme, and the defense ETF. So in the previous portfolio, AI had picked BAE Systems and Lockheed Martin. We had spoken about it, and we wanted to go keep slightly more American in our defense spend. We're sort of now looking to be underweight European and overweight American. And that VanEck defense ETF sort of heavily weighted towards US defense companies and broadly holding US defense. And those were our sort of changes, and then obviously the pick and shell.
Yes, and I'll touch upon some of the results now. So we are actually beating it, the ChatGPT portfolio and the benchmark for the week. So our portfolio was up 0.56% over the past week. ChatGPT's was up 0.46. The benchmark, which is a proxy benchmark which we've built, which is 80% equal weight world plus 20% cash in order to reduce exposure to overexposure to certain areas of the market. So we beat that benchmark by just shy of 50 basis points. So yeah, pretty happy with that. Obviously, it's only 1 week performance. So
Very nice. 1 week performance. I think if you 0.56%, if you annualize that, it's 29%.
yeah, absolutely. I mean, it's great to see this performance, but you know, these portfolios are. We're trying to build something long term here, so you know, I think the proof will be in the pudding over sort of a month. I'm not going to get too ahead of myself over here, but yeah, so far so good with the portfolio.
All right, so we've rushed through that part. Where did the difference come from, Aaron? Take us through the drivers.
So this is how areas of the human portfolio perform. So this isn't an attribution, but this just shows how the ETF or the stock performs. So you've got the NASDAQ, the S&P 500, Shell, VanEck doing particularly well for the week. Gold flat, FTSE flat. As mentioned, there was a little bit of pressure regarding commodity prices and luxury good brands. Cash as well, flat. A little bit of negativity in Crane shares, which is the China internet sort of thematic Chinese tech exposure, and also European equities were down in the dumps a little bit after the tariff deal with America.
Yeah, so it's really fascinating to see. So with that US tariff deal with the EU, effectively American defense companies emerge as one of the biggest winners. So we had already seen with the big beautiful bill that there was going to be increased spend in US defense. The particular winners there were going to be the shipbuilders and the air defense contracts. So companies like General Dynamics, Huntington, those were the two major winners, which is why we wanted to be in US defense. Then the EU tariff deal comes out, and the EU, as part of the deal, are going to be buying at least $250 billion worth of American defense. And so there's just this broad sort of strengthening or support in American defense. And so we're seeing that come through. And then the negative being coming in through the European position.
So what I want to touch on here is that we've got VanEck defense ETF, which is diversified defense exposures, up 1.5%. If I then go on to the AI portfolio, we've got BAE Systems, which is a defense stock, which is down 1.5%. And now what that tells me is that it's, you know, sometimes picking single stocks introduces idiosyncratic risk, which is the risk of one specific stock or a group of very similar specific stocks selling off. With defense ETF, if you want exposure to a theme, sometimes that can be useful, and that's how we felt it would be good to do some of that exposure, to have a really diversified exposure so that we weren't reliant on one company's. In this instance, BAE Systems was affected by that deal that you touched on, Martin, and also the earnings. It was you know, came to the market this week, and even though earnings were strong, it had a little bit of wobbly guidance, which made the stock fall. So that's the issue sometimes with picking individual names, and that's why we've gone for something slightly more robust, I would say, in terms of this sort of what we call idiosyncratic moves. So that's sort of single name moves.
Yeah, I think this is again the discussion around UK and European defense versus American defense. So BAE Systems earlier this week, strong performance, revenue of 14.62 billion, up 11%, beating consensus, but their orders have declined 13%. On the flip side, Lockheed Martin, they've built out a huge order book. I think that something like they've got a backlog of 176 billion, and that's increased by 75 billion just in the last year. So that's really the difference in that theme, is that we really have the theme. It's not just defense, but you have American defense versus European defense.
Exactly. And we also have a, you know, as per the task, asked ChatGPT what it recommended next. And this is what it suggested to do now for its portfolio. It wanted to trim clean energy in two ways. It then added an optional product, an optional suggestion, but the trim was to trim the ETF, which was the INRG iShares product, add sort of a UK quality dividend ETF, whilst it wanted to trim next era energy and now add gold, which is something that we already did prior to that. So it's maybe jumping on our bandwagon after seeing our performance.
Yeah, so it's really interesting to see that it wants to trim a winner. So next era, one of the winners in its portfolio, snapping at its winners and going into a bit more diversification.
Well, what I was going to say with regards to how it's trimming is it's quite weird, in my opinion, from sort of a long-term investment perspective, to go sort of all in on a theme and then to cut it very quickly. So I think this is where the divergence of the human performance, where we would sort of look at something, look to hold it longer term, unless we saw a complete collapse of, sentiment with regards to that. But, with regards to this, it seemed to have done something very quickly.
I want to see if there's any questions coming in from the gallery. They haven't included their costs to the 10 bips outperformance. Rich, we're using the free version of ChatGPT and trading on IG, zero commission.
Thank you, Caught Short, that they have us lads odds-on favourite. Yes, we very much appreciate that. We're quite happy with the performance so far. I think, as I said, we need to continue to do this over the longer term. Performance isn't that important when you look at sort of week to week. It's that sort of long-term years figure. I mean, when we look at the smart portfolios, we look at sort of year to date, 1 year, 3 year, 5 year performance when sort of speaking to the clients and potential investors in them.
Yeah, I think we're a week or two away from producing a fact sheet for the AI portfolio. We just need to give it a name. I think that's something we can potentially get to the gallery. David Boyce often comes up with the best names, so we need to find that. So don't print the P45 quite yet. Thank you, David. I enjoyed that one.
Very funny. Right, well, we hope to join you next week. Hope you join us next week for the next segment of this, and to see whether we can beat ChatGPT again. I think we can do it. I think we can do it even after these interesting changes it's produced. We'll see what happens in markets, and I think we've built some quite a robust portfolio. But like and subscribe, and we'll see you after the break.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100, where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, overowned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down. Welcome back, everybody, to All Sessions. You've seen my good friend Dylan Rattigan is joining me here.
Good morning, sir.
How are you?
Good morning. Never better. Never better.
So Dylan, I'm not sure if you caught our last segment there. It is man versus machine. Our good friends Aaron and Martin have set up a challenge so they can take on AI. However, ChatGPT just did send me a message and said, you haven't given me a chance to be interviewed. So I want my moment on air. So I thought, so let me just see if ChatGPT.
Let's see what, does your bot have a name?
It's Warren.
Okay, well, let's see what Warren has to say.
Warrenetta. Okay. ChatGPT, you are now on air to the world. Go ahead. Please don't swear.
I'm not sure Aaron and Martin truly represented my ideas in the game.
Fair.
They seem to have dumbed them down so Rich could understand them. I will be victorious next week.
That's the last time.
That seems like a bit of an ad. That seems like a bit of an ad hominem intellectual attack from the bot upon the fund managers, which I actually take as evidence of weakness on AI's part. I think that if AI has to go to some sort of ad hominem intellectual indictment, I believe that that is not a strong position. And I was going to be more of an advocate of the AI, but now that I understand Warrenetta's petty attitude, I think I'm going to change my position to be in support of the humans.
Bit over defensive, wasn't it?
Little defensive, a little deflective.
Yeah, no actual argument against the underperformance.
No, just a questioning of the intellect, which to me seems entirely baseless and foundationless.
Sounds like one of my performance reviews. Right, let's have a look at this All Sessions
Here we
Open.
go. I want to show you this. Can I show you a picture? I found it. Should I text this? I found an important picture.
Fantastic. Right, you messaged me that while we open the New York Stock Exchange for Business. There it is. Meta up 12.5%, $782. Microsoft up 9%, $559. I thought we'd seen the highs of that last night. I was wrong. Amazon up 3.5% on the back of those good results ahead of their numbers this evening. AMD up 3%, Nvidia up 2%, and Palantir up 90 basis points. What did you make of those that start to the big four earnings last night, Dylan?
So we talked about this a lot last night on overtime.
Yeah.
And when the forecasts are that catastrophically wrong, and I consider those forecasts to be catastrophically wrong, I believe it's an indication that the forecasting mechanism itself is completely useless and broken.
Yeah.
So I don't even look at this like, oh, this is a big beat from Meta. I mean, obviously, it's a huge beat from Meta by any sort of mathematical measurement. But I believe the information that is revealed in the beat is not so much about the performance of Meta, which is obviously massive and extraordinary and compelling and all that. But I think the fact that the companies, let's say Meta is probably one of the top 10, maybe among the top 5 most analyzed, most covered, upstream this, downstream that, user engagement this, data that, data monetization this. I mean, this is not some backwater, 2-bit penny stock that doesn't have any coverage. This is probably, like I said, one of the 5 or 10 most covered companies on earth.
Yeah. And they've been 20% wrong in forecasts.
Wrong.
20%.
So wrong that it suggests that they have no idea what is happening. And it reminds me of, and I'm sure it reminds everybody, and it's not unique to me, but it reminds me of a couple of years ago when NVIDIA was just blasting it, where the estimates would be X, and the NVIDIA report would be X times 1,000 or whatever it is.
Yeah.
And it was not so much an indication that NVIDIA was performing extraordinarily well, although obviously it was an indication NVIDIA was performing extraordinarily well. But for me, it was an indication that the analytical community has literally no ability to anticipate how powerful the impact of AI is financially, whether it's on the sort of picks and shovels metaphor of NVIDIA or on the use of AI to create income, as we saw both with Microsoft and then profoundly in the case of Meta. And it makes me wonder how wrong everybody is about everything else. I mean, it sort of goes also to the presidential polls, all the data forecasting and all the money and ego and sort of prestige that goes into the elite forecasting of financial returns in the world's largest companies. I believe that they have an obligation to be, let's say, within one standard deviation of correct, and ideally within less than one standard deviation. And so when they're wrong by this level, not only is it an indication of how good things are at Meta, but I think it's an indication of how much momentum exists that can't be. It is impossible to model. Nobody knows what's happening. And the only thing that really is happening right now is that there are financial consequences manifesting inside the largest technology companies on earth that no one understands. And it makes me wonder, it'll be interesting to see the move in some of the other sort of the adjacent names. I think Amazon is really well positioned to just blast with AI. Obviously, Meta is there. Obviously, Microsoft is there. I think Google is also extremely well positioned to blast with AI.
Yeah.
And I don't think, I just think that we have to be very careful. All of us rely, because there's a human desire for certainty in an uncertain world, and there's a human desire for a preference to defer to so-called expertise as a way to sort of obtain that certainty. And I believe this is just the latest example of how dangerous that is. I mean, it's if this had gone the other way, the wealth destruction would have been catastrophic. And in this case, it's a wealth creation event, so no one complains so much. Yeah. But when you're allocating from the largest pension funds in the world, from the teacher's pension, from the fireman's pension, from the doctors and nurses' pension, into the largest companies in the world, and you're relying on some expectation of stability, or at least predictability, or at least visibility into what's going on, and then you see that the mechanism to deliver that is, in my opinion, completely broken.
Yeah.
I believe it is an indictment of them, and I believe it is a huge indication of just how big things may actually be here, and much sooner than anybody expected.
The expected move on Microsoft, 4%, and the stock's up 9%. What happened to pre-reporting? If your numbers are so good, you have to come out 3 weeks ago and have to say, just FYI, the market is so wrong on these estimates. We're having to come out and give them a helping hand by
guide higher, basically.
Yeah. Those used to be the rules that people played within.
Yeah, I mean, I think we all know this, that over the last decade, that the resistance that the quarterly reporting mechanism is terrible for managing any company, because most strategies for growth and development develop over a period of, let's say, 2 to 3 years, especially when you're dealing with companies and budgets at the scale of the companies that we're talking about.
Yeah.
And so evaluating them every 3 months is also a broken concept. And I believe that the management of those companies are the first ones, that they're the ones that are the most victimized by it and have the most resistance to it. And I think that their decision not to provide the guidance is sort of a passive aggressive expression of a rejection of the idea that they need to be monitored by virtue of guiding the street all the time, especially if they're going to beat to the upside. So the penalty for them is it's not like they're going to be penalized. It's one thing if you don't warn the street that you're going to guide lower, and then all of a sudden you alienate everybody, and the street abandons you, and your stock's abandoned, and coverage is abandoned, and you get all the abandonment issues.
Yeah.
Which you really have an incentive to guide and communicate. But when you're on the other side, when you don't give guidance, and then you come out with a barn burner to the upside, you just make everybody look silly and basically validate the idea that you can't judge companies based on their quarterly performance.
Now, we've walked everybody through the AI, the game, man versus machine. Did you ever play anything like this, Dylan?
So it's interesting that you bring this up. There's a long ago, for my first decade of my career was as a financial reporter for Bloomberg, and then I spent the next, decade plus 12 or 13 years as a host and show creator at CNBC and then subsequently MSNBC. But there was the Wall Street Journal was always famous. I think the Wall Street Journal invented this, decades ago,
right?
Where they would do man versus monkey. And they would basically, pick, the top 5 portfolio managers on Wall Street. And then they would say, pick your top 5 names or your top 3 names or whatever.
Yeah.
And then they would go to the monkey and then give the monkey the stock sheets. This is when it was on the, in the paper. And then the monkey point to some things. And then they would have the monkey compete. And so I thought it would be fun when I was at CNBC. That was a little more intimate. I didn't expect to have such an affectionate relationship with the monkey. But he was so friendly, and he was a hell of a stock picker, and he really just wanted a little attention. So I gave him a smooch. But was that funny? You don't kiss monkeys?
Well,
you're not a monkey kisser?
I'll tell you what. Let's see what AI thinks of that, shall we?
Okay.
Don't get any ideas, Scottish man.
God, this ChatGPT is really aggressive, isn't it?
Are you paying the $20? I feel like you're getting like the free answers.
Yeah, the low end.
I think you're getting budget AI. These are very budget answers from the AI today, I gotta say.
Well, we found out it's their name is actually Warren Bottet.
Warren Bottet.
Very good from Boise. Very good. You've redeemed yourself.
So can we talk about the U.S. dollar and its beautiful rally and its glorious and fabulous return to
exceptionalism's back?
Sorry?
Exceptionalism is back and underlined.
Exceptional, yeah. Yes, finally. I mean, of course, I've been calling for the dollar long since we talked in mid-April, and I've been catastrophically wrong. So I'm hardly in a position to start crowing on the last day of July, but better late than never. I look at the dollar move as basically a huge expression of confidence that whatever's going to happen with the tariffs is not going to be consequential, that August 1st is not going to matter, that the percentages are going to keep moving from 20 or 15% to 10 or 5%, which is, I think, sort of a widely held opinion. And now with more and more evidence of that by virtue of the actions of the Trump administration and some of the recent discussions and agreements and things, that the dollar would not be moving like this if there was an incredible confidence that the consequences of tariff mania are all but irrelevant at this point.
Yeah, and certainly priced in. But even Andrew Bailey, the head of the Bank of England, coming out in his testimony last week and saying one of the most over-owned positions was short dollar. I think, that's when the head of the Bank of England starts to talk about something like that, then, we should take note.
I mean, do you think that that's what my other concern about the dollar, and it's not just the sort of green candles on the immediate sort of present moment, but if you look at some of those down red candles on the back on the chart a bit, the U.S. dollar is not supposed to move like this.
Yeah, very true.
I mean, it's supposed to be the most stable store of value on earth. and it's moving more and more like a meme coin, which to me is also greatly concerning. So I'm personally pleased to see the dollar get stronger, but I'm more largely concerned to see what should be the most stable store of value on earth behaving in such an unstable or volatile manner, which I do think is an indication of the relative, and again, I have to emphasize the word relative because I still think the American government is very stable, but the relative move towards less stability in the way America governs itself, I believe, has a direct correlation to the increased volatility in the U.S. dollar.
Has he won? Has he beaten Europe in this confrontation?
I don't see how anybody wins in a confrontation between America and the world. Yep. America loses in whatever any confrontation between the United States and the other developed economies is a lose-lose proposition. Mm-hmm. And so, no, I mean, no one has won here. The only thing that's happened is the cost of business has gone up. The confidence in the U.S. currency has been marginally diminished. Yeah. And I think the only thing we have going for us is the belief that the only thing that is superior to the Trump administration's activities is the U.S. bond market, which has been the referee for the behavior, both going back to April. The one morning you and I spoke, we were right on the day. I remember very clearly talking to you, and then it was literally that day that the bond market just flipped the whole thing over. Yeah. And then we saw it even again a week or two ago, maybe it was 2 weeks ago, I can't remember exactly, when Trump floated the idea of firing Powell. And again, it took about 20 minutes of bond market activity for him to retract that. Yeah. And so I think we all should send a nice big Christmas card or Hanukkah card or whatever it is for the
bond market.
The bond traders for keeping things on sides this year when it comes to global economic policy, especially when there's been such an aggressive attempt to sort of go out of bounds. So thanks to them.
Dylan, absolute pleasure as always. Are you back in Milan at the moment?
I'm in Milan. I'm in at home base, and I'm at your service. I did have a fine run through Turkey, though. I cannot more highly recommend southwestern Turkey if you're looking for a place to go this summer.
Beautiful.
Go to Turku.
I think we'd take Milan, we'd take Turkey, we'd take anywhere over the way London is this morning. But
I mean, did I steer you wrong when you were in Italy when I sent you to Santa Margherita?
You weren't meant to tell anybody where that was. You're meant to keep it for ourselves.
They'll never find it, as you know. It cannot be found on the Italian train schedule unless you speak Italian. So yeah. They'll never find it.
The one thing I did miss, there was no pool tables there. I enjoy a good game of pool in London, and that's my holidays.
Okay, well,
none of that.
It's a good thing you live in London, so you can enjoy that anytime, can't you?
My man, it's been a pleasure as always. Miss you, and we shall see you next week.
All right, looking forward. Have a great day, Rich.
And you.
Hey, welcome back to the latest in this series called Decoding Crypto with Ryan Grace, all the way from Chicago. Ryan is, of course, the head of Tasty Crypto over there. Welcome back, Ryan.
Thank you. It's nice to see you, Angeline. How are you doing?
Good, really good. Earlier we talked about, all things risk associated with crypto, but I want to kind of focus on where we're heading with this and the future of crypto and why it matters perhaps more now than ever, right? So we have some people sat on the fence where, they say crypto is still the unknown. And then there is the other side of the fence, saying that it's now deeply embedded in global finance, that with blockchain tech being adopted by banks and institutions, that this will only improve transaction speed, transparency, and adoption.
Yeah, I don't know if we're totally there yet, where it's deeply embedded in the broader global financial system. But we're clearly on a path where the existing system and some of the efficiencies that are gained by blockchain technology are starting to converge. You still need regulations that many of these financial institutions can adhere to. They're on their way. Mm-hmm. But in terms of adoption, you're absolutely seeing positive growth rates there, right? We're at 500 million people, roughly, give or take, in terms of crypto users globally. By the end of this decade, it's estimated that we'll be closer to 1 billion, if not prior to that. So we're on the path. We're seeing positive developments here in the US and elsewhere on the regulatory front. And you're seeing a lot of large institutions, whether those are financial services companies, they're banks, they're payments companies, they're all starting to look at this a lot more closely than they have in the past.
What kind of growth are we talking about here? I mean, speaking about the US, I saw a figure from security.org saying that in 2025 so far, some 28% of American adults roughly own cryptocurrencies. Do you expect this figure to grow? And if so, by how much? Or do you expect it to kind of be plateauing at this level for now? What is the trajectory?
Yeah, at this point, I would expect it to grow, right? When you look at penetration rates around the world, at least in developed nations, you're right there, 20 to 30%. And that's grown substantially, where just years prior, it was 10, 15%. So I would expect that to continue to grow. I don't think that every single person or every adult, let's say in the US or in the UK or the EU, is going to necessarily be a crypto investor. But I do think that they will use this technology. And over time, whether they know it or not, I think a lot of the technical complexity will be abstracted away. But this technology will underpin a lot of financial services, making it more efficient, in some cases, removing intermediaries. And so they'll, in a sense, become crypto users, whether they're crypto investors or not. So again, I do think that we're still in the early stages of adoption. And if you look at growth rates of crypto adoption compared to growth rates of the internet, and mind you, not everybody on the planet has access to the internet, but there are about 4.5 billion people that do. So with roughly 500 million crypto users here today, 4.5 or so, maybe 5 million internet users, 5 billion, excuse me, then you're likely to see more global crypto adoption over time.
At the same time, you know, we are seeing this rise in adoption, but we're also seeing, you know, some security factors that have led to hacks or loss of coins. You know, I'm just giving you a few names, you know, Bybit, DMM, Japan. Are we going to see this sort of continue, or are we going to see more hygiene, more security, more regulation, and therefore this will start, the incidences of like these will start to subside?
I think it starts to subside, right? We're never going to remove the cybersecurity threat in the same way that that's only growing here when we look at broader online businesses, e-commerce, fraud associated with some of this activity, right? That exists, it's persistent, and it's become a very large industry in terms of protecting against that, right? When we look at cybersecurity threats and fraud and the losses as a result of that for Fortune 500 companies, it's still an astronomical value, much more than what we've seen in terms of cryptocurrency exchange hacks. So cryptocurrency exchanges, service providers, participants in the industry are going to continue to face threats in the same way that the financial system does, and you know, many others as well. But I think over time, it becomes more robust, it becomes more durable. You learn from mistakes. I think we see less of it. I think, again, you're going to have persistent cybersecurity threats, but within a more regulated environment that looks less like the Wild West that we have been accustomed to in the crypto space, I don't think that you're going to see the FTX style kind of fraud and some of the issues that have plagued the industry. There will still be those threats to the industry, but I don't think it'll be by players that are within the industry.
This also coming in a time when we have a huge institutional adoption and interest in adoption. So we've heard from the BlackRocks, the JP Morgans. We're seeing major financial players like the big banks, Bank of America, Morgan Stanley, and governments increasingly give off good, positive mood music surrounding crypto. We now finally we talk about shift, but it's actually that paradigm shift that everyone's looking for, right? With enough momentum, is it now that we are finally able to say that crypto has shifted towards mainstream acceptance and integration?
Yeah, I think so. I think absolutely mainstream acceptance and integration. I mean, I think you're still going to have skeptics, and maybe rightly so, depending on what area of crypto that we're talking about. But when you think about Bitcoin, certainly it has reached mainstream adoption. We are starting to see the growth of stablecoins. I think that only continues. The stablecoin market cap right now is about 250 billion in total across all chains. And I think that by the end of this decade, you likely get to a market cap of $1 trillion. You're going to see more and more companies that participate, maybe starting there. So certainly has reached, to some degree, mass adoption. I think there's two things at play here. One, when you look at countries, governments, sovereign wealth funds, large financial institutions, endowments, et cetera, that are starting to look at an investment in the space, that's in Bitcoin. And that's looking at, in some ways, diversifying away from dollar-based collateral very slowly over time within the financial system. And there's a variety of reasons for that, whether it's currency debasement or the weaponization of the dollar by the authorities here in the United States. Right or wrong, you have a bit of a fracture in the system, and you're starting to see a shift away from that. It's the one asset that has characteristics similar to gold. It's a hard asset in many ways, and it's untethered to the existing system. So you're seeing the adoption of that in the financial sense. But then from a technology perspective, the adoption of blockchain technology is ongoing. And the reason for that, in my opinion, is this is a technology that disrupts financial intermediation. You have a multi-trillion-dollar business in terms of mediating financial transactions. And so all of the intermediaries today, the third parties, the middlemen, have to figure out how to participate within this paradigm shift, or just to simply participate in the paradigm shift to survive, because it is going to be very disruptive. It's much more efficient. It's ultimately faster, cheaper for the end user, but it removes some of the big players that have very lucrative businesses that sit in between here. And so there will be a push and pull, and I think that's why in some cases you've seen kind of a slow start to the evolving regulations on a global basis. But I do think it's inevitable. And so on one hand, you have all these companies that are going to adopt this technology. You'll see more users and more use cases as a result. But on the other hand, you already have today a lot of very smart investors that are keen on Bitcoin.
And Ryan, let's end for these investors so that they can look ahead. What are the key events that they should be looking out for that will impact crypto? We've already seen the latest Bitcoin halving that was in 2024. We have also seen, Bitcoin ETFs launched as well. And you touched a bit on regulatory shifts too. What are the key events that you are looking out to in the coming year?
Yeah, within the next year, the events that are on my radar, as I'm US-centric and sit here in Chicago, are primarily focused on US regulation. So legislation that passes here in the US, both related to stablecoin as well as the broader crypto market and an infrastructure bill there. Whether we get that in the next 3 months, 6 months, or a year, or we get it all, who knows? I'm hopeful, and we've heard a lot that's encouraging. I think that we would consider that it will be something that's done this year. So I'm hopeful that you get regulation. I think that then leads to a lot of participation by much bigger companies, financial services, institutions that have kind of sat on the sidelines here. And then the other thing that I would look at from a price perspective and maybe the participation side of things is twofold. One, more ETF approvals, so additional tokens. And I don't think that you need to see the ETFification of every crypto asset. But when you have some of these larger market cap tokens like Solana, for example, that there's not a lot of participation in from the institutional side, an ETF wrapper makes it a lot easier for some of these institutions to participate and brings new money flow into the space. And so I would look for more on the ETF front. I would look for the Ethereum ETFs in the US, at least, to be able to pass on staking rewards in the form of a dividend that further incentivizes participation in those. And I think the other thing that you have to have on your radar here is what happens from a monetary policy perspective. So interest rates globally are still relatively elevated from some of the lower levels that we've seen historically. I think the path forward is lower rates that should be conducive to liquidity in the system and typically has supported these crypto asset prices. Whether you see anything beyond that is probably dependent on if there's a little bit of a slowdown that you have to go through first, and then you get debt monetization, you get open market purchases from the Fed and others. You could go through a bit of a volatile period prior to that, but ultimately on the other side of that, on the margin, that liquidity in the system has really benefited prices. So that's what I would be on the lookout for.
Amazing stuff. Thank you very much, Ryan Race, the head of Tasty Crypto, joining us all the way from Chicago, talking about does crypto now matter more than ever. For more on the series, do check out our site where we're collating all this in one happy place for you. Ryan, catch you next time. Thank you very much, Ryan, and have a great week.
Thank you. You too.